Welcome back. Now, it certainly has been a topsy-turvy week when it comes to business news across this week. Then even the world's richest people have certainly felt the impact then as Wall Street began to fall off as well then yesterday as well, as it seems that the tech counters no longer were the flavor of the month. The likes of Apple, Amazon.com, Tesla, as well as Nvidia all struggling along as well in yesterday's trade out on Wall Street. So a bit of a struggle coming through onto that market picture there. That market picture did mean that Asia itself did not see some good numbers today as well. Big falls across the board for most of that market picture. Also, we got word then out of the Chinese economy itself then, where that country seems to believe that at least in another decade they'll be able to hold things up when it comes to their market picture, and they'll become the world number one economy in at least the next 10 years time. So the next decade or so is their prediction. That just assumes that China itself then will be able to leap forward unabated, and that their growth is seemingly unstoppable. Perhaps a few question marks around that one. Some negativity then filtering through into the local market, unfortunately, as well, because of that fall that we've seen out in the rest of the market. A bit of weakness there, perhaps confidence dipping ever so slightly then in those tech counters. So it was a little bit more of the defensive stocks doing the heavy lifting in some of the share counters, even on the local front. Then some strength still, perhaps, even if it is ever so slightly with regards to the South African currency, around that 16 Rand 70 mark against the US dollar. The oil price then also continuing to languish, unfortunately. Then still many questions around demand continue to be asked as to where things will go then for that oil price. Overall, though, the picture around platinum still not headed towards $1,000 a fine ounce. If anything, languishing and sitting at around $900 a fine ounce there, with gold also sitting firmly around that $1,960 a fine ounce mark too. All right, let's have a chat then with Warwick Lucas from Galileo Capital, who does join us now live via video link. Warwick, always good chatting to you. Thank you so much for the time. This market has been, I suppose, today very weird. Where did this big fall off on the tech counters actually come from? The Nasdaq seeing a big fall there.
Good afternoon, Rabila, and to the viewers. I guess it's really at a stage in the market where there's a heck of a lot of noise. I think there's been a lot of participation by, amongst others, many new investors who have received bailout checks and having nothing else to do with them have taken them and punted them on the market. And we've got a mix of economic news as well. I mean, for example, we saw both better and worse kind of news coming through. So, for example, some decent growth data in some areas gave us some pressure on gold. But then on the other hand, we saw unemployment data that suggested that the post-pandemic employment and economic recovery might be slowing elsewhere. So the data coming through is messy. But I think it's hardly a surprise given the kind of large swings that we have seen. So I guess the market's sort of trying to do a balancing and weighing here, and it's very noisy, the data out there, and I think as a result noisy on the market.
Yeah, that noise then filtering through into what seems to be a slightly stronger rand today, 16 Rand and 56 cents then against the US dollar. Is there anything to write home about there, or is it just purely dollar weakness on that front?
I think it's steady as we go there. I mean, we can see certainly the dollar is not looking particularly strong, given the kind of slack monetary or loose monetary policy by the Fed. I see there on the euro as well. I mean, those are continuing to show a stronger euro against the dollar as well, which is often your key indicator right now as to what's actually happening there. So I wouldn't draw too many conclusions from it. Hey.
Yeah. Yesterday we saw the likes of Impala Platinum coming out with a set of earnings that perhaps surpassed many people's expectations or thoughts maybe, but the mining sector has certainly been doing well. I mean, Implat's putting out a dividend for the first time in what was it, nearly 7 years in fact. Can the growth for those resource companies continue? Is it just a COVID-19 factor?
Well, I think it does matter, of course, what has happened across the whole basket. We have had a certain amount of changes in formula and what is the particular metals that are desired. And of course, rhodium, for example, has often been a small one in the past, but it certainly packs a punch when it matters. And I think that the cocktail is a big part of it. The weaker rand has been a big part of it. So it's one of the few possible beneficiaries that we've actually seen. And then, of course, there's an element of speculation in precious metals. So I think it's certainly encouraging to see that. But I think in a lot of ways it's still relatively early days for the miners. And I guess they make hay while the sun shines. But as to how long it can continue remains another story.
Yeah, is the sun shining on the oil price though? Yes, it's higher, but still below $45 a barrel now.
Yeah, absolutely. I mean, I think the concern in the oil market being that even if there is a decent kind of recovery, once you've got past the enormous above ground supplies, will it see new supply come back on stream from the shale producers? That remains obviously always an open question. And then at this time of year, hurricane season in the US is always a little bit of a wild card, and depending on how those various hurricanes as they tear through approach the US or not, as the case may be, it can also swing the oil price around quite a lot. So yeah, I think we're looking at some seasonal noise there.
Sure. Any particular sectors you're looking at now for potential growth as we hopefully head towards some sort of middle to end maybe of the COVID-19 cycle and virus, that situation? Any sort of companies you feel will perhaps come out of this a little stronger now?
Look, I think what we can say is that across most of the economy, the worst of the shutdown data is over. I mean, we can certainly see from companies coming out when they talk about what is happening concurrently. I mean, the recovery is steadily gathering some pace there. So obviously what we hope for is whatever capex that got deferred is now getting pulled forward. And going to come through. So perhaps some of your hardest fallers may produce some of your big gainers. I think the key question is picking amongst those that have suffered long-term damage and that will continue to remain in place because the industry has changed, and those that have merely suffered a severe cyclical setback. And I think it remains to be seen who will actually be who.
So interesting. This market picture certainly will get quite interesting as well as things continue to shift up as well. From Galileo Capital, that's Warwick Lucas. Warwick, appreciate the time. Have a good weekend. Chat soon as well then. And continue to join us here on SABC News.